phrase energy fulfillment might sound like marketing jargon, but it describes the real-world logistics of how a data center in a remote corner of Texas stays online during a grid crisis. We're dissecting United Energy Corporation, or UNRG, and their pivot into a massive infrastructure gap that most major utilities are frankly struggling to bridge. This isn't just about drilling for gas anymore. It's about the localized delivery of power in an era where artificial intelligence and industrial automation are making the traditional electrical grid look increasingly fragile. William, how does UNRG move from being just a gas producer to solving this urgent problem? It's a complete shift from being a commodity producer to becoming an infrastructure provider. For years, UNRG was primarily known as a diversified oil and gas player with deep roots in places like the Cherokee Basin across Oklahoma and Kansas. But the recent $31 million acquisition of Alkane Modus Vis and specific assets from Alkane Midstream, which just closed in April 2026, marks a fundamental change in their DNA. They've essentially bought a plug-and-play midstream and power generation platform. And the center of that platform, as I understand it, is a 100,000-gallon-per-day LNG production facility in Seminole, Texas. But when I think of LNG, I usually picture those massive coastal export terminals. How is UNRG's approach different? You're right to differentiate. UNRG is doing something very different here. They're focusing on small-scale LNG, taking the gas right at the source and turning it into a mobile power solution. The Seminole facility is the hub, but the real value is in the virtual pipeline logistics that came with it. By acquiring those transport assets and the experienced operating team, UNRG can now move fuel to where the grid isn't. According to their corporate materials, this combined organization has already delivered over 120 million gallons of LNG and more than 750 million kilowatt-hours of distributed energy. That's a serious track record they're bringing to the table. The timing for this pivot seems almost suspiciously perfect. The broader energy landscape in 2026, especially concerning data centers, has changed dramatically. What's driving this sudden, immense demand for power? Data centers are the elephant in the room without question. S&P Global recently reported that data center power demand has nearly tripled since 2020. And in Texas specifically, it's surging toward 13.5 gigawatts this year alone. These facilities simply cannot wait 5 or 10 years for new high-voltage transmission lines to be permitted and built. They need power today, which creates a critical infrastructure gap. And that is where this energy fulfillment model truly comes in then. Precisely. It's an integrated approach where one single company handles the natural gas production, the liquefaction, the trucking, the regasification on site, and then finally the actual power generation through modular gas generators. For a data center developer, that eliminates the headache of dealing with 5 different subcontractors. It's a behind-the-meter solution, meaning they aren't even relying on the main utility grid for their primary load. But isn't there a tension here between the push for renewables and this resurgence of gas-fired power? The American Action Forum noted a massive 71% surge in non-renewable capacity additions between 2025 and 2026, while renewable growth actually flattened out a bit. Does UNRG's reliance on natural gas put them at odds with the long-term sustainability goals of these tech hyperscalers? It's a balancing act, but reliability is currently the priority. These AI workloads require 24/7, 5/9 uptime. You can't get that from solar and wind alone without massive, expensive battery storage that isn't quite at scale yet. Natural gas, especially in the form of small-scale LNG, acts as the bridge. It's significantly cleaner than coal or diesel, and because UNRG systems are modular, they can be deployed in weeks, not years. The market is basically voting with its wallet. Natural gas interconnection costs are roughly 1/10 the cost of solar when you factor in the infrastructure hurdles. So let's look closer at the geographic footprint. With this acquisition, UNRG is now operating across 7 states: Arizona, Kansas, Montana, Nevada, North Dakota, Oklahoma, and Texas. That covers some of the most energy-intensive regions in the country. What's the strategic advantage of this broad yet targeted coverage? That regional diversity is a major strategic moat. In the Permian, for example, the issue is often stranded gas. Producers have natural gas but no pipeline to move it, so they often have to flare it. UNRG can take that stranded gas, liquefy it right there with their modular units, and turn a waste product into high-value fuel for a remote drilling rig or a mining site. It's an efficiency play that solves an environmental problem while generating revenue. Meanwhile, Arizona and Nevada are becoming massive hubs for data centers and advanced manufacturing, making them prime targets for this kind of localized power solution. The financial side of this deal is also worth noting. A $31 million transaction for a company with UNRG's market cap, which has hovered around $20 million recently, is a transformational bet. They aren't just adding a few trucks, they're absorbing an entire operating team from Alkane. That human capital is often the hardest part of the LNG business to scale. The experienced LNG operating team phrase in their announcement is key. Operating a liquefaction plant and managing a virtual pipeline isn't something you can just learn overnight. By folding in the Alkane team, UNRG bypasses a steep learning curve. They've also mentioned they're evaluating further expansion of the LNG capacity to meet demand from aerospace and aggregate industries. Those are sectors with very specific, high-intensity energy needs that the grid often overlooks. It's interesting you mentioned aerospace. We're seeing a massive increase in commercial space activity, and many of these launch sites are in remote coastal or desert areas. They need massive amounts of reliable power and often use LNG as a rocket propellant itself. UNRG is positioning itself as the last-mile provider for those niche but high-margin markets. And the scalability is the most compelling part for investors. Traditional energy infrastructure is built in multi-billion-dollar chunks. UNRG's modular approach allows them to grow incrementally. They can add another 100,000 gallons of capacity at the Seminole plant or deploy another bank of generators at a data center site as the customer's needs grow. It lowers the capital barrier to entry and allows them to be much more agile than a massive utility company. We should talk about the risks, though. UNRG is still an OTC-traded company, and while they've stated goals to move up to the OTCQB venture market, their recent financial reports showed a profit decline largely due to lower crude prices and higher administrative costs, despite a rise in overall turnover. Exactly. The risk is execution. Can they successfully integrate the Alkane assets and maintain that high delivery volume without service interruptions? The market for distributed power is becoming crowded. You have big players like GE Vernova and even midstream giants like Energy Transfer moving into the space. UNRG's advantage is being a pure-play energy fulfillment company. They don't just sell you the turbine, they own the gas, the plant, and the truck. It seems to be a bet on the deglobalization of energy in a way. Instead of relying on a massive interconnected national grid that's vulnerable to cyber attacks or weather events, UNRG is building a network of localized energy islands. That's a powerful narrative for an industrial customer who can't afford a single hour of downtime. The term virtual pipeline is perfect for that. It's about flexibility. If a data center in Nevada needs more power, UNRG can reroute trucks from Oklahoma. You can't do that with a physical pipeline. That adaptability is what will define the next decade of the energy transition, especially as the demand from AI continues to outpace every forecast.